Hey guys, welcome back. In today's video, we are talking about the squeeze cycle, Michael Burry buying $350 to $400 per share, and many more in this video. First, we're taking a look at this. We were right about everything else and have yet to be proven wrong. Gold, silver, banks, feds, swaps, housing crisis, Evergrande, hedge funds, etc. You really think on the one thing we are the most confident in happening, AMC/GME winning, it's going to be the only thing that doesn't happen? It's all connected. Now, I strongly agree with this because a lot of things that have happened now has been called out by apes very early on. But one of the biggest things that we also saw was a lot of people calling us delusional, a lot of people calling us dumb, just for it to end up happening. A big thing we talked about has been, of course, the gold market and silver market. We've seen silver go up to the highs of 117 today. Now, 3, 4, 5 months ago, when people were talking about AMC's investments, when people were talking about apes, talking about commodities, talking about these metals, we were being laughed at, we were being ridiculed, and now we're seeing how that market is going. And so everything we have talked about pretty much have all come true. And so the biggest thing in terms of understanding AMC and GME squeezing, especially with all the data we have, I truly think that that is going to be the thing that happens, and that will be the thing that we are the most confident in, that we will call with certainty, because we know what's going on. When you take a look at some of the other markets, firstly at crypto market, we're very likely to see crypto continues dropping. Recently, we've seen it having a decline. It could be that Bitcoin is going to 37K as basket stocks like GME and AMC, the squeeze cycle coming by March to May. Short hedges and market makers who use Bitcoin as liquidity will liquidate them, is my speculation. Now, this ties in with the whole basket stocks thing that we have talked about. Essentially, is these hedge funds, they have assets that they are long, and then they have assets that are short. In this case, they will have assets like Bitcoin long and assets like AMC and GME short. Now, the whole point of that is that during the times that Bitcoin is going up, they will have the collaterals to continue shorting AMC, to continuously shorting GME. And that's how they are able to get that whole momentum going. However, the flaw with this plan is that when the long assets in these baskets start to decline, starts to drop in value, things starts becoming risky. And at times like that, in order to make sure that everything doesn't blow up, they will have to liquidate their position. But just like we've seen, if they were to liquidate all of their Bitcoins, if they were to get rid of Bitcoin from their basket, that will get rid of a lot of their power to manipulate and suppress AMC, which allows us to run. So as we're looking at Bitcoin dropping in value, what we're going to be looking at is the decrease in liquidity with these hedge funds. What we're going to be looking at is the struggles of these hedge funds. Now, bear in mind, it's still hovering around the 87K level. We may see it drop further. And if we do see it drop further, that's when you're going to be starting to see the struggles shown by these hedge funds. Another big thing is that Michael Burry has announced that he owns GME and that he has been buying recently, in which he talks about he's buying at what may soon to be 1x tangible book value and getting a young Ryan Cohen investing and deploying the company's capital and cash flows, perhaps for the next 50 years. So we have seen Michael Burry talk about GME before. We've not only seen him talk about just now about owning GME, but we've seen in the past talking about how the whole situation with GME and AMC, in which it caused the volatility that we talked about back in the days. And so now that we see him own GME again, as we're going into a time where we're seeing illiquidity being issued, we talked about the Japanese yen market, we're talking about silver and gold going crazy, we're looking at these hedge funds struggling, banks potentially failing, he's starting to talk about GME again. I do think that there is something that's going on here, in which he's not just buying GME for the fundamental values, but also he expects what to happen when all the hedge funds and banks all have to give up. Furthermore, with a defining GME quote in terms of being long GameStop is almost as asymmetric as it gets these days in US common stocks. So he's obviously very bullish on GME, and one thing it's talking about is I'm not counting on the short squeeze to realize long-term value. So the big thing about this, and it may just be me overlooking into this, but the reason why I want to talk about this part is because he's not talking about a short squeeze in short term. He's talking about a short squeeze in long term. Now, I don't want to confuse that with he's talking about there won't be a short squeeze, but rather he thinks that even after a short squeeze, the long-term value would be even higher. He believes in the long-term value whilst not downplaying the fact of the potential short squeeze that may happen. And so that's why I think he's extremely bullish on GME, and especially with everything else going on right now. And we talked about this. When GME squeezes, the mutual shorts that are shorting both AMC and GME will be affected, which will cause AMC to squeeze as well. And so that's something we have to realize. Another big thing, and you can see, is what we've said about how apes were right early on, how AMC was right early on, but we were continuously being laughed at. But now who's laughing? As we look at this, we took so much derision in 2022 when we invested $28 million in Hycroft Mining. Investing in a gold and silver mine, they scoffed. Today, our total Hycroft holdings, including the cash from our November sale, are worth about $72 million. He who laughs best. And so we have to realize, yes, AMC could have made even more profit. This is something that I have talked about and being explicitly open about this. AMC could have made more profit if they held onto their holdings. However, we have to realize AMC did it and was able to cut risk. And by giving up opportunity, by giving up the potential return, they cut risk. And now, despite that, they still have these options, they still have the warrants that they are able to exercise, in which it will still make them profit. So even if Hycroft was to continuously go up right now, which we'll talk about in a second, they are still able to make money. And so this is something that we have to realize about AMC. And this is why we've said that these investments are the investments that we're looking for. And for people who are gutted in terms of what we said, AMC could have made more money, you have to remember, they cut risk. They were managing risk correctly. People always complain about AMC spending money, and yet when they do manage their risk, people complain about it. And it's always hindsight 2020, but you have to realize, I personally think that AMC has played this extremely well. Another thing in terms of why I talked about how AMC is going to make even more money is because gold we're seeing making new all-time highs. Hycroft Mining gold resource above ground value at today's price is worth $53.6 billion. Their market cap right now is only 4.2. Not to mention, we also saw silver making new all-time high as well, which again further boosts the value of Hycroft. Now, not only that, you can see Hycroft at $50 per share, using 100 million shares outstanding, equals $5 billion market cap, which equals to about 4% in-ground metal value, using Friday's closing gold and silver prices, and a 2022 resource of 1.5 billion ounces of silver equivalent. Past metal manias like Poseidon Nickel 1970 and Silver Standard 2011 have market cap at 30% of in-ground metal value. Hence, 30 divided by 4 implies 7 to 8x current Hycroft price, which is $350 to $400 per HYMC shares. Just like what we talked about here with how much their above ground value is, we're also looking at more than 10x. We're also looking at, with previous data, how Hycroft could easily reach $350 to $400 per share. And so this is just talking about how much more money AMC is able to make. Now, the reason why I keep on talking about this, because I know a lot of apes have bought into HYMC as well, but it also directly affects AMC because they are able to make more money. If we were to see the current price 5x or even 8x, we're essentially looking at this number, which actually is around 42 million to 8x as well. And so that's something that we have to realize about how powerful this can be and how much money AMC can make. And when they make that much money, you got to think about how much they can improve. Furthermore about this is which you're looking at which junior discovery miner sits in second spot in the list of top 15 gold and silver juniors for the last 3-month performance, where Hycroft is actually taking second place. So if you want to talk about how much value they have, this is what we're looking at. If you want to talk about past data, how much they should be worth, this is how much we think they should be worth. And if you want to look at in terms of, is there still a future? Are they performing correctly? Are they performing well? Well, here it is. So from multiple aspects, we're looking at how this is a great investment, and we're looking at how AMC is looking to profit off of this. You can see, never forget, they said HYMC was a terrible investment that wasn't worth anything. The same exact people said the same exact thing about AMC. Know what you hold. Now, this is what we've said. Just like what we said at the start, apes have been right about so many things and have yet to be proven wrong. And just like what we see with here is that people who are calling out the AMC investment were the same people that called out the HYMC investment. And now you can see that they were clearly wrong. And we've not seen these haters on HYMC talk about it again. And that's the same thing that will happen with AMC as well. Now, about AMC furthermore, is that say some things out loud. AMC's price to sales ratio is 0.16. Industry average historically has been 15 times that. Box office starts ramping up in earnest in barely more than a month and will commence a 10-month plus run not seen in 7 years. AMC's debt is lower than that time 7 years ago. AMC's popcorn and merch revenue radically higher than that time 7 years ago. So when you compare, and we talked about everything else, but when you just look at the fundamentals, when you just look at the data and you see what's about to happen, you understand why we continuously say, even without a squeeze, AMC is a golden potential. Even without a squeeze, AMC is looking at a 10x, 100x return because of how undervalued it is when you compare it not only with the industry average, but how big this industry is also going to get. Not to mention, we are seeing how their revenue is radically improving, and we're seeing how they're improvising and being efficient. And so this is what we've said with all the potential that is there for AMC and why we see it as a golden potential. Now, in a recent post, CEO Adam makes a nice reference back to 2022 when he debunked and warned about false info being spread about AMC. At that time, the share price was $125. Now, he was obviously talking about this popcorn particular issue, but I do believe that every time when he does post something, we've seen it in the past before, he's obviously trying to link it to different various amount of data, different things that he wants to say, but can't physically and publicly say. And so with everything that we just said as well, with how undervalued it is, we're looking at how AMC can easily go to 125. And what's more, as of Saturday, we're seeing the domestic box office is 71 million ahead of the same day last year, and is currently the biggest post-pandemic ever at this date. And you have to realize Q1 is always light, but even so, see the direction up and to the right. And so we can see that even with the Q1, now we did have a bang of a film, Avatar, that has continuously grossed into this year as well, which is something that's extremely good. But we have to realize is that this is everything that we have talked about. These are what we've said with how well Avatar is doing, with how well these movies can do, and all the potential that is there for us. And so we have to realize we're already off to a good start to this year, and it's only progressively going to get bigger. Furthermore, we're seeing the biggest idea I'm working on is an amazing idea. It's not sports, can't talk about it until January or February, said by CEO Adam, a not too wild guess. That amazing idea has something to do with ongoing talks with bondholders. So recently we've seen some rumors where they're talking about AMC in top with debt note holders looking to restructure again. Now, the take on this is that maybe a short seller bought part of the new 2029 debt note on the secondary market and wants a debt for equity deal. Cheap shares at 160 to cover, desperate to exit. Now, one of the sore spots for AMC has been this debt issue. Now, personally for me, I don't think it's anything major, but we can't lie and say that when you take a look at the overall things that are used about AMC, debt is what's being most talked about. Now, I talked about my reasoning for why I don't think that debt is too big of an issue, because it shows that a company is growing. It shows that a company has used this to, make things. And we've seen plenty of other companies, we're even looking at these top companies to all have debt as well. So that's why for me, it's never been a problem, but it's something that has been used by people to obviously tackle this. And so if AMC wants to potentially make their investment look more lucrative and incentivize other people to come in, debt is something that they want to tackle. Now, because of this, we see some opportunity perhaps made for these short sellers where they want to buy into the debt and they want to convert to equity. Now, there's two reasons for this. Firstly, it's because they realize how little supply of AMC shares there are. And for them, they just want to get their hand on AMC shares. The demand for AMC shares has always been there. We talked about it with institutional ownership. We talked about it with OBV. And we know that realistically, the supply shouldn't be there, but because of the synthetics. However, if they want real shares, this is possibly the only way for these big institutions who want a large amount of shares to get any real shares of AMC. Now, the second is talking about how these short sellers are obviously desperate to exit. And I think that's the main thing that people talk about as well, which is talking about AMC's debt and the fact that allowing these short sellers to then convert it into equity, convert it into shares, it allows them to exit. To that, I obviously agree with you. Yes, if short sellers were to get their hands on these debt and then were able to make a deal where they convert it into equity and then cover it, that is something that is possible. However, to that, I have to say one thing, which is when we've done the due diligence, when we've looked at the data, we've seen that there are billions of synthetics that are out there. So yes, this may allow some short sellers to cover 10 million, 20 million, 50 million, 100 million shares, which is of course still a lot, not to say it isn't a lot, but you have to remember this is only even at most 100 million against the 5, 10 billion and even more synthetic shares that they have created. So yes, it allows them to cover a small portion, but there's still such a vast amount of synthetic shares that exist out there that I don't even think 100 million shares is going to do anything to that. So that's my take on it. Obviously, everyone has different opinions on it, and I completely understand why. But, the fact we see them wanting these shares is showing how desperate they are to exit as well. And it shows what we've said with the fact that if they can't exit, it's eventually going to blow up. And when you look at what we talked about earlier with the liquidity problem, you can see the Japan's bond market has been something that we are obviously looking at. We're looking at how the liquidity index spiked to 9.5 points this week, indicating the worst liquidity condition ever. You're seeing what's happening in real time right now. We talked about why they're desperate to exit, because they're failing in Japan market, they're failing in the crypto market. It's only a matter of time before they run out of any money and that they can't suppress AMC anymore. That's why they're desperate right now to cover. We talked about the Fed is preparing to sell US dollar and buy Japanese yen for the first time in history. Once again, it really shows what's happening in the current market. We're seeing the Japanese PM talking about will take measures against speculative market moves. This is just to highlight how serious this is. On top of that, we talked about silver, and not only that, it's talking about how comic silver futures will almost have no chance to physically settle beyond March. And so if that is the case, you can obviously see how big that is going to get. And, this is what we said again, with the bond market. And then finally, if you take a look at this, billionaires brought back 746% return on his mining stocks. And this is what we've said with how well the mining industry is going right now and why AMC and HYMC is only going to continuously grow. Now, it's always done this at financial advice, so do take us to go and so much to your own due diligence and research, and I'll catch you guys next time.